This training on understanding journal entries is presented by the Financial Management Training Program of the Carl Vinson Institute of Government. We currently use 5 account categories when posting transactions to accounting records. These categories are assets, liabilities, fund equity, revenues, and expenditures. Assets are defined as something you own. Examples of asset accounts are cash, receivables, inventory, and prepaid expenses. Liabilities are defined as amounts you owe. Examples of liabilities include accounts payable, salaries payable, and deferred revenue. Fund balance is the difference between revenues and expenditures over the life of your government. Journal entries for day-to-day transactions should not be posted to fund balance. Generally, only year-end closing entries for revenues and expenditures should be posted to the fund balance account. Revenues are amounts received during the year for use in providing services. Examples of revenues include taxes, fines, fees, and licenses and permits. The rules for the normal balances for each of the 5 accounts are as follows. An asset has a normal debit balance, a liability has a normal credit balance, fund equity has a normal credit balance, revenues have a normal credit balance, and expenditures have a normal debit balance. A debit does not mean increase or decrease. A credit does not mean increase or decrease. The effect of a debit or credit on an account depends on the account's normal balance. Debits must equal credits for each journal entry. When deciding whether to debit or credit an account, you should first use the following rule. To increase the balance, do the same as the normal balance. For example, an asset has a normal debit balance. To increase an asset, debit the asset account. A liability has a normal credit balance. To increase a liability, credit the liability account. To decrease the account balance, do the opposite of the normal balance. For example, an asset has a normal debit balance. To decrease an asset, credit the asset account. A liability has a normal credit balance. To decrease a liability, debit the liability account. This chart summarizes the rules for journal entries we discussed. It may serve as a helpful tool while learning to write journal entries. At this point, you may be asking yourself, if a debit increases an asset, why does my bank account decrease when I use my debit card? Your bank account is a liability to the bank, so it appears as a credit balance on the bank's records. Using your debit card reduces your cash account. Debiting an account with a normal credit balance results in decreasing the account. This is the reason your debit card decreases your cash account. Since your bank account is a liability to the bank, making a deposit increases your bank balance on the bank's records. To increase the cash in the bank's records, they credit the account. Since crediting an account with a normal credit balance increases the account, your cash account increases. To write a successful journal entry, multiple steps are required. First, determine which accounts, cash, accounts payable, tax revenue, etc., are involved. Next, classify the accounts according to category, that is, asset, liability, revenue, or expenditure. Remember, we do not post daily transactions to the fund balance account. For each account, determine the normal balance. Once you know the normal balance, decide whether you want to increase or decrease the balance. Remember the rule. To increase an account, do the same as the normal balance. To decrease an account, do the opposite of the normal balance. Debit entries are written on the first line of the journal entry, followed by credit entries. Let's practice the rules of debit and credit with a sample journal entry. Your government receives $200 cash for payment of fines. In applying the steps for journal entries, first, you will determine which accounts are involved, in this case, cash and fines. Next, you will classify the accounts. Cash as an asset and fines as a revenue. In the third step, determine the normal balances of the accounts. Cash has a normal debit balance since it is an asset, and fines has a normal credit balance since it is a revenue. For step 4, determine if you are increasing or decreasing the account balances. In this example, cash is increasing and revenue is increasing. For step 5, to increase an account balance, do the same as normal balance. Cash will be debited and revenues will be credited. To complete the steps, write the journal entry. Cash will be on the first line since the account is debited. Revenue will be on the second line since this account is credited. Notice as well, when manually writing a journal entry, the credit entry is indented. Whenever a journal entry is entered into the accounting system, it affects account balances. For this example, both cash and revenue had a $100 balance prior to the journal entry. When the cash account was debited by $200, the balance increased to $300 since a debit will increase the balance of an asset account. When the revenue account was credited for $200, the account balance increased by this amount since the normal balance of a revenue is a credit. This concludes our discussion of understanding journal entries. For a more in-depth explanation of journal entries, you may take our Introductory Governmental Accounting Part 1 course. Visit www.cviog.uga.edu/training/online for registration details.